One of the things that we really should talk about, because as much as metals have moved, one of the things that has happened is there has become an enormous spread between the bid side of silver and the ask side of silver. That's what I just talked about. That's so. But explain to it, because if somebody calls us in today or tomorrow and says, Andy, I want to sell 2,500 ounce bars, and we give them a number, we have to go off the bid side of spot, and that's going to be a bit strange when they're seeing it trading. Right. So explain it a little bit.
Well, let me read something to you. My dear friend Michelle McCory just sent me, because I think it's important to understand. She sent me this. This is from the Perth Mint. I can't validate it, but Michelle is a pretty smart gal and said this is what she just heard. Perth Mint suspends silver sales amid global shortage. Australia's Perth Mint has halted all silver product sales due to overwhelming demand and supply chain issues, while U.S. dealer commercial rare coins and precious metals has frozen transactions as of October 13th, 2025. The shortage stems from industrial demand in solar panels, electronics, and EVs, outpacing mine production by hundreds of millions of ounces annually, driving spot prices above 50. That's not the reason, but that's part of it. Per ounce, and record premiums on physical bars. Experts highlight plummeting London vault inventories and refining capacity strains as key factors fueling potential further price increases. So the bottom line is simply this. Again, if I buy back metal from people, I have to hedge it. If we have 1 million ounces of silver in our warehouse and the price goes down by $1, we're dead. We lost $1 million. So we have to hedge it. But if able to hedge it with contracts, it's $3 back. What do? We have no choice. And if you look around, you'll see this is not just Miles Franklin. This is every company in America. Everyone's freaking out. Half the companies aren't even taking orders. Our supplier, one of our suppliers this morning,
called us. Yeah,
he sent an email saying that
they're halting
all trading until we get a handle on the premiums, on the availability, and on the spread.
Reading that refiners are pushing retailers to buy back junk metal and sterling at 50% back a spot. Andy, what are you hearing? That's definitely not true.
Not true.
I think our buyback right now on junk, I think Josh just did the rewrite. I think we're probably around 350 back, somewhere around there. So about 350 back a spot, which is extremely competitive. It might be even a little bit better than that. I don't even know. But no, it's definitely not 50%. That's for sure. All right. And then we want to go to Earn Dog B. If someone were to have 1,000 ounce bars, would this be a good time to move them into small denomination bars? So because this being huge demand and get the same amount of silver back.
If he did it into junk silver, he could probably.
No doubt. Junk silver, no matter what, even still right now. And premiums, trust me, are definitely on the rise. When we got our wholesale numbers from the large wholesalers and distributors today, Silver Eagles have shot up enormously in premium. You will find that right now, most dealers out there are probably going to be close to about $8 over spot for Silver Eagle, roughly around there. So junk silver, you can still get very, very inexpensively relative to the overall market. So definitely something to look at.
I'd also like to say people have probably read the Bloomberg article that's talking about the shipping of metal back to London. I think it's all bullshit. There's a little bit. You got traders taking advantage of that spread, but it's a cover story as far as I'm concerned to calm the nerves of the market. If supply were fine, they wouldn't need a PR rush in order to say everything is fine, is moving back there. The physical supply just isn't there. And you can't move enough metal across the Atlantic in a fast enough time to meet urgent delivery needs, which means you're getting margin stress. People are getting margin calls and they have to deliver or do something, and it's hitting the paper market. And this means leveraged players are under severe pressure, real pressure. And this is, I guess, a hallmark of illiquidity and forced liquidations. And it's going to start to hurt some big players in this market.
This is the third person that's asked this question. So when will silver become a tier 1 asset? Any info or talks in the works?
No, but it was reclassified a critical mineral. That's correct. Nearly the same thing.
Right. They just asked the same question. Well, here's a great one. Habitat for Rockhounds, Jim Fry. What is the volume ratio of buyers to sellers at Miles Franklin recently?
No one's selling.
No one. Today, I can tell you that I personally took probably about 45 orders today. Not one of them was a sale order. Not one of them was a buyback. 45 orders is a huge amount of business for us to do.
He says this is a breakdown in confidence in the greenback as a reliable store of value. This is what markets look like when the world's reserve currency is at least partially losing its value or store of value function. It's kind of like your dollar is acting like a melting ice cube here in Aruba. He said that the denominator for all those asset prices, the dollar, is what's actually declining in value. He argues the erosion of trust in the dollar is the unifying factor behind soaring commodity prices. Tight credit spreads and strong equity markets. Real assets are well positioned to capture what the U.S. dollar has and is losing. It's true. And I don't know. I think this is just beginning. I truly do. I think it's going to get nuts.
Well, I think, and this is kind of a funny one, because Costco Online had, Joe Potter says Costco Online had 10-ounce silver bars for $569.98.
We're less than that.
Way less than that. Way less than that. So, but I will tell you, inventories are definitely depleting. I would say that, and I don't know if I said it already, but without a doubt, the most common question that we had today was, do you have any silver left? We do. But
don't look.
I'm not looking.
Don't look. What do you think gold and silver are up this year to date?
Silver is going to be up roughly about 75%.
72.
Gold's going to be.
That was before today.
Yeah, gold's going to be up roughly about 56.
54.16. Tattoo, good job.
There are moments in history when markets stop behaving like markets, when numbers on a screen stop representing reality and the entire system begins to show cracks. Right now, that's exactly what's happening in precious metals, particularly silver. Prices are moving, yes, but what's really happening underneath is far stranger and far more significant. We're witnessing the breakdown of trust in the very system that's supposed to define value itself. Now let's start with what's going on this week, because even for someone like me, who's been in this business for over 30 years, this one's a head scratcher. There's now a massive spread between the bid and ask price in silver, so wide it's making dealers, refiners, and investors scratch their heads. For those who don't live in this world, here's what that means. If you call me today and say, Andy, I want to sell 2 500-ounce bars, I can't just look at the spot price and pay you that. I have to go off the bid side of the market. And right now, that bid is significantly below the trading price you see online. It's not because we're being cheap, it's because we can't hedge it. Let me explain why. Normally, if I buy metal from you, I hedge it in the futures market so I'm protected if the price drops. But today, the futures price, the paper price, is $3 lower than what I have to pay for real, physical silver. So if I buy your metal and hedge it on paper, I instantly lose money. I can't do it. Nobody can. That's why this spread exists. It's not just a pricing quirk, it's the symptom of a broken system. And it's not just me saying that. Let me read you something I got this morning from my friend Michelle McCrory. She's sharp, and she just sent me a note that the Perth Mint, yes, the Perth Mint, one of the largest refiners in the world, has suspended all silver sales. Why? Overwhelming demand and supply chain issues. That's the official line. But the truth is, there's a full-blown shortage. According to the report, industrial demand for silver in solar panels, electronics, and EVs has been outpacing mine production by hundreds of millions of ounces annually. That's not a minor deficit. That's a chasm. The Mint said this supply-demand imbalance has driven spot prices above $50 an ounce, with record premiums on bars and coins. And refiners can't keep up. Now think about this. One of the world's biggest government mints has literally stopped selling because it can't source enough metal. That's not tight supply. That's a breakdown. And the story doesn't stop there. Dealers in the US are freezing orders, not because they don't want to sell, but because they can't get reliable replacement metal. This morning, one of our major suppliers sent an email saying, "We're halting all trading until we get a handle on premiums and availability." That's never happened before in my career. Never. When you see every major dealer in America hit the pause button, you know something's wrong. Refiners are now so desperate they're trying to buy back junk silver. That's old 90% US coins, at 50% under spot. That's absurd, and it's not true everywhere. We're still buying it around $3.50 below spot, which is extremely competitive. But it tells you there's chaos at the wholesale level. Nobody knows what anything's worth because the market's detached from reality. And here's the weirdest part. Even as premiums explode and inventories vanish, people aren't selling. We're getting dozens, even hundreds of orders a day, and not one of them is a sell order. People aren't offloading silver, they're hoarding it. They're calling asking, "Do you have any silver left?" And we do for now. But the demand is unlike anything I've seen since 2020. Actually, scratch that. This is worse. This is what happens when confidence in a currency starts to crack. When people stop trusting paper promises, they move into real assets. I saw a quote this week that sums it up perfectly. It said, "The dollar is acting like a melting ice cube in Aruba." That's exactly it. The denominator, the dollar, is the part that